Should you get a financial advisor? It depends. This video is split into 3 sections. 4 key areas financial advisors can help with: fee structures, and the true hidden cost of a financial advisor. Common areas people need help with are investment management, tax planning, estate planning, and insurance. No one's an expert at all of these, but a good financial advisor will identify issues and have relationships with experts who can help fix the problem. For instance, a financial advisor might determine that you could benefit from a living trust, so they'll refer you to a great estate planning attorney who can help actually implement it. Moving on to fee structure. Fee only means the only way the financial advisor generates income is from the fees you pay them directly. Fee-based means they generate income based on fees you pay them, and also they generate commission on financial products that they sell you. This can be an issue because they might be incentivized to sell you a product, like let's say an expensive insurance policy that you don't necessarily need, but they'll receive a kickback from the insurance company on the back end. Moving on to the actual fees. Generally, financial advisors charge an assets under management fee. So they might charge 1% of all the assets they manage for you up to the first $2 million and maybe 0.5% for anything above $2 million. 1% sounds low considering interest rates are at like 6 or 7% right now. However, there's a massive hidden opportunity cost that hardly ever gets discussed. Let's get into it. Let's assume you give a financial advisor $500,000 of assets to manage. The rate of return is 7% and the advisor fee is 1%. We've got years on the left, portfolio value, the 7% return minus the advisor fee gives us the starting portfolio value of year 2. So for year 1, you start with $500,000, you earn a 7% return, which is $35,000, and then you pay the financial advisor $5,000. You're left with $530,000 in the beginning of year 2. This pattern continues, and by the end of 26 years, you're left with $2.1 million. The total fees paid come out to $295,000. This does not include the hidden opportunity cost of all the compounding that you missed. So the value with a financial advisor, let's just keep this right here. Now let's run this analysis as if you didn't have a financial advisor. So we'll change the advisor fee to 0% because we're not using financial advisor in this scenario, and your ending portfolio value is $2.7 million. So if we take the 2.1 minus the 2.7, you lost out on $567,000. So it felt like you paid $295,000, but really you lost out on $567,000. Now, if a financial advisor looked at this, they might say, hey, my investment strategy will earn you an extra 1% to 2% compared to if you were managing it yourself. So it's really not expensive and you're actually not losing any money. If they could consistently beat the stock market indexes by 1% to 2%, they wouldn't be in the financial advising industry. They'd be hedge fund managers charging millions and millions of dollars to institutions. This video isn't bashing financial advisors. They provide invaluable, holistic financial advice for you and your family. For instance, they can help you determine if you're on the right track toward retirement, how to save a bunch of money using various tax strategies, when to take Social Security, and many more. Some financial advisors charge a retainer, by the hour, or even by the project. These can be good alternatives if you want to see if you're on the right track toward retirement and you're comfortable doing a lot of the administrative work on your own.